back. Hope everyone's doing amazing and having an incredible day, week, year, month, wherever you are. The sun is shining somewhere. We got you for the next 15 minutes just to give you some love and talk about what's happening in the markets and the political spectrums of the world and also the financial spectrums of the world, because we are solving America's problems. And one of the big problems is people want more money and they need more money and they want that money to last longer.
Yes. And we also say, or at least I say it a lot, is that if you're not paying attention to politics, then you're not paying attention to your portfolio. The federal government and all governments are the biggest spenders, they're the biggest employers. You don't have to watch it like I do. I don't recommend that, but I do recommend that you listen to the two of us and just where that intersection is, and that's where you'll make money. My friend, we're going to keep on saying like highest highs, and they keep on keeping on, right?
That kind of crazy.
I don't know, is there anything new to say there? It's like, it keeps on going up and we're all terrified of it and we're all making money on it. And
yeah, that's pretty much it. I mean, the Dow Jones hit a new all-time high, yesterday. So I don't know. Like, that's what I'm telling people. Like, I don't see why it's not going to continue to go higher. The SpaceX IPO came out. That's a big deal. And it's a great representation to me, at least, of like what is very interesting with the system out there, because Amazon and Microsoft, right? Both of those companies are worth $2.5, $3-ish trillion, and SpaceX is now worth that amount of money. Now, when people say that they don't make any money, they don't make any profit. And that was one of the big things that people would say about Amazon for a long time. They don't make any money. It's like, right. No, they make revenue. They don't make any net profit.
Yeah.
And companies can do that for a very, very long time. They don't have to be profitable, because profit is, well, according to the IRS, you don't need to make that much profit. you need to make revenue, right? So every 2 out of 5 years, your company has to be profitable, but it doesn't say by how much. And when you're looking at a company like SpaceX, I mean, for 3 years, it can make no money, but as long as revenue is increasing,
right,
it doesn't have to make any profits. And I think it's just a big thing to be aware of. Is it worth Amazon or Microsoft? No, it's way, way, way too overvalued right now. And as I mentioned weeks ago, months ago, we're going to have the IPO hype. We're going to have the IPO push. And the realization that I want everyone watching is, and I'll do a super fast screen share as well, the beautiful reminder, ladies and gentlemen, is you can trade anything. That's the reminder. So here's SpaceX. Here's the last 3 or 4 days. And all of this is tradable. But it's tradable because you can trade anything if it's going up or if it's going down. There were tons of stocks that went from 160 to 220. Essentially, or let's call it 160 to 220 is 60 points. There's a lot of stocks that went up 60 points in 3 days. Micron did it, SanDisk did it, NBIS did it. There's a lot of other companies that did it. So you can trade this movement literally with anything at any time. And just looking at the candles also, just to kind of imagine that this was any other time frame, this candle says, hey, there's a lot of selling pressure, right? So the people that were buying the stock and selling the stock intraday were selling it. And then we closed above all of those sellers, getting a lot of excitement. And then we continued up to just yesterday. So today is probably going to be an inside day, meaning it's going to be within the highs and the lows of yesterday. We'll rest, and I have no issue with us breaking higher, believe it or not, and continuing the IPO initial hype push, which happens on almost every single tech IPO. And then I'll have a nice little retracement and it'll come back down to 120 or 130. And then we'll probably go higher again. And so the beautiful part is, regardless of what the industry is, what the stock is, what the company is, we can trade literally any of this at any time. CrowdStrike, a big thing to talk about. So CrowdStrike, another stock that actually is profitable and is making incredible revenues. And this is a cybersecurity company. So CrowdStrike has gone up 76% in the last month and a half. We did have a small pullback and smaller rest, but they did announce a stock split. So we're getting a 4-for-1 stock split on CrowdStrike, which means if you own a share, you're about to have 4 more shares at a quarter of the value. That to me will say that this will pull back and rest a little bit, and then eventually we'll go higher. because the reason that stocks generally split is because the board says, hey, the stock is too pricey and not enough people are going to be able to buy it, and we want more people to buy our shares, so let's decrease the price. This is the first stock split in the history of CrowdStrike. By the way, since we're here, let's just go and look at really fast what the IPO did, and you'll notice, oh wow, we had an initial push and then we went lower. I mean, this is what SpaceX is going to do. So it's okay. This is just what tech stocks do. Not a big deal. Really beautiful push, good run, up 61% in that first 2.5 months of IPO, and then it ended up going lower, providing you a great buying opportunity, and then it crushed. So CrowdStrike, first stock split ever. And then last but not least, just for me for right now, Micron Technology is reporting earnings next week. This is one that both myself and Big Beat with Quasar Markets love to short. Seems like every time I'm on I'm on the call, we look for a short trade. So Tuesdays and Thursdays apparently are the days to short Micron. Today, I do think it's going to gap up into 1060, and there will be a small little drop at some point today on Micron Technology. It's something that people can take a little bit of advantage of. So ultimately, for me, the way I'm looking at it, I kind of see it as a very, very interesting move that I am quite confident that we're probably going to have a gap up on earnings. I would love a gap down. A gap down will be bought up if it does gap down, but I do think on earnings, Micron probably gaps up just because it's been so strong. And again, another stock that has had an astronomical, incredible run, and there's been so many that have. And I know we need to pull back at some point, and I don't know how big it's going to be. We did just technically get one in the tech market. The Dow Jones wasn't really a pullback, but the tech market was. The Dow had a 3% pullback, hooray. But the overall tech market, which was the QQQ, the NASDAQ, we did have an 8% drop in like a week. So that did happen, and that is technically all we need for it to go higher.
And the political side of this is that there is no politics. That is the most concerning thing from the political side is that it's all gas, no brakes. And so this industry is going to have pullbacks, but they're not going to be triggered by an administrative or a political action. It's going to be happening from places that you may not expect it. My belief, and I mentioned this, I think yesterday with you guys, is that all of these valuations, because I lived through the dot-com bubble, and we all, most of us lived also through the 2008 financial crisis, is that all of this works, like housing in the 2008 and dot-com in the 90s, it all works when it's going up, 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 up. And as soon as something goes a little bit down, everything comes apart. Yeah. So, like all of these valuations, and it's so many different sectors that are intertwined, just like the housing bubble was. Like as soon as an IPO for an Anthropic, as soon as a IPO for OpenAI gets delayed, it's going to spook everybody. Those are the things. And then you're already seeing rumblings in the last couple of weeks with major CEOs, like Uber CEOs, coming out and being like, we're not really seeing the return on investment, and even how we determine what investment return is when it comes to these AIs. We haven't figured out what the math isn't mathing for us. So that's what from the political side. There's nothing to say. So that's when the politics isn't paying attention. That's when you should actually be a little bit concerned, because that's all about letting a little bit of air out of the bubble. We've had no discussion about housing. It's been obliterated by oil, and it's been obliterated by inflation. It's been obliterated by the tech sector. I think coming into Q3 and Q4, that's going to be way into our space. But political wise, the only thing that's really anybody's talking about is certainly oil, Straits of Hormuz, and all of that. Thumbs up. Less chaos is going to really treat certainly the market well. Inflation is still going to be working its way through the system for a long, long time. So there's nothing immediate to talk about other than, oh, thank goodness people aren't firing rockets at each other. So that's like, yay, thumbs up. We need less of that. And so that's sort of the political side as far as affecting the markets. That's what it is. Yeah,
I agree. Totally agree. I'm glad that, to your point, no one's firing rockets. Like, let's make sure that doesn't happen.
Thumbs up.
Yeah, thumbs up for that. And I do kind of think that oil and the whole situation, I mean, oil prices have been going down.
Mm-hmm.
I'm actually generally interested in right now some insurance companies, because you've been mentioning the word insurance a bunch. And
Well, yeah, it doesn't matter what any of the politicians do or say other than, stop lobbing missiles at each other. It's the only thing that's going to open up all of the oil spigots is insurance companies. So as soon as an insurance company writes a check and says, hey, by the way, I'm willing to underwrite a multi-million-dollar piece of equipment and a lot of oil going through a very chaotic space, then it's all gas, no brakes there. But until the big insurance carriers come up and say, hey, by the way, I'm willing to underwrite this, then nobody really cares. So it's going to be insurance carriers. It's going to be any kind of damage that's in the area. It's going to be those are going to be the things that are going to let the oil flow, let the spice flow.
Yeah.
So yeah, you're looking at insurance carriers. Who are you looking at?
Yeah. Well, I mean, just from a, I guess, broader market perspective. Yeah, tradability perspective. Let me pull up some.
Show me.
So the two interesting ones, for sure, Allstate, mostly because it's just been in an extremely, extremely strong trend, and it just kind of, I mean, the only pullback we've ever got was the tech bubble in 2008. And, obviously COVID, you had a quick little dip, but in general, if you pull up the chart, like the chart's just been slow and steady and to the right, just growing, right? Got held up really nicely by the 100. So what that tells me is the overall industry is still strong. So then I'll flip over to Progressive, and Progressive Insurance has had an actual correction. So Progressive was down from 288, down 30%. These are longer term investments, by the way. So for anyone who's watching who loves boring blue chip, long-term investments, these are two of them that I'm looking at. And then of course, the number one insurance company, Berkshire Hathaway, BRKB from the GOAT. Here's the weekly chart. And again, talk about a stock that's just been an absolute monster. You had a pullback in 2022 of 25%. And we really have pulled back, but it's been a stock that does what's called correct in time, not necessarily price. So you had this really, really beautiful run up. And now for the last year and a half, almost 2 years, we've been kind of flat, kind of trading sideways, kind of compressing. And so ultimately it's kind of cooking to slowly kind of press out of here. So again, these are all longer term investments, but I just try to listen very closely with the smart people, and Dave's extremely smart. So when he talks about insurance companies, I say, okay, all right, let me pull up some insurance companies and just look and see what some of them are doing.
The other political thing that I think we've got to keep looking at a little bit with that finance is we can talk about the FO, like the Fed and all of that, like that's not really interesting to me and most people. It's like people are like, oh my God, Fed up and down in inflation. Yeah, I get it. I get that the new guy, Kevin, right?
Yeah.
He wants to be talking less. Good old friend of the show, Kevin. Like he's going to be talking less. I think that's probably good for the markets. You don't want that. However, what you do want to start looking at is some of the big releases of information. One of them's coming up this week is retail sales. It might already be out. It was a bit anemic, I think, is the kind of the $10 word on that. It's basically kind of flat. That's, some people might say, hey, that's good news. The consumer is still there. You have to flip that around and actually pair that with consumer sentiment and debt on credit cards. So what's that actually telling us? It's telling us that people are using their credit cards in order to take care of staples. And that is no bueno. That's just pushing the can down the road. So it's like looking at one thing is not useful. Looking at both of them going together, or two things or three things going together, consumer sentiment is really, really low. And credit card debt is going up. And so when retail sales come in as just a little bit above, that's telling us that the consumer's under stress. And that's going to be like like it's a big complicated system. It's going to be oil, it's going to be inflation, it's going to be all of these things. You want to start hearing, particularly as we're going into midterms. This summer is my Super Bowl time, which is watching all of the politics happening over the summer, all of the primaries. You want to hear them start talking about, helping individuals, helping consumers, helping people with their health care, with the oil prices, with the inflation. You're going to hear that more populism come out as we roll into November. So that's what I predict there, and that's what I want investors to start paying attention to.
I love it. Self-promotion.
Yeah.
Had my book come out today, translated in Spanish. So Money Grows on Trees, for those who are watching the show, if you're a fan or you like the book, just dropped it in Spanish. Also have it translated in German. So just FYI, it's kind of cool. So
we all have links in this.
I'll send a link to Dave. Yeah, if you're listening or watching.
Yeah.
If you have a friend who primarily speaks Spanish or someone in your life that speaks Spanish that would just like to read awesome material about money and mindset and growth and happiness in Espanol, check it out. And for everyone else who's watching, Dave and myself and Big B, we're going to be here tomorrow. I'll be broadcasting from Austin, Texas. Hopefully, fingers crossed. And thanks all for being big fans of the show, for popping in, for watching, for letting us pour into you and letting us create some amazing solutions for your life and the lives of your community fellow members around you.